Alrighty, here we go. Welcome everyone. Welcome. Welcome to the Crowdproperty Investor Q&A session hosted tonight by Birchal. My name's Marty from the Birchal team, and we really appreciate you giving us some time in your evening to join us to hear more about the upcoming investment offer that's going live next week for Crowdproperty. What I'll do now is just briefly give you an overview of the structure, and then I'll pass over to the Crowdproperty team for some introductions. So tonight, it's really all about questions and answers. We're going to leave as much time as possible for this. You'll see down the bottom there on your Zoom panel, there's a Q&A forum. If you just click that, you can add a question at any time. And you can also put a little thumbs up next to questions if you want them answered. So that's how we'll actually prioritize answering the questions tonight. So at any time you have a question, pop them in there now, and we can get to them straight away. I've got a bit of introduction from Birchal to go through for 5 minutes, and then the Crowdproperty team have a slide deck to give you an overview of their business and this opportunity for about 15 minutes. So we'll cover both of those at the start, and then we'll get into the questions and answers. But what I'll do now is pass over to the Crowdproperty team for some introductions.
Thanks, Martin. Hi, I'm David Ingram. I'm the co-founder and CEO of Crowdproperty Australia.
And Daniel He, Property Director of Crowdproperty Australia.
Thanks, guys, and great to have you here tonight. Now that we've got a few more attendees joining, I'll just kick us off by acknowledging that Birchal is beaming in from the lands of the Wurundjeri people of the Kulin Nation, and we pay our respects to elders past, present, and emerging. Like I said, a little bit of housekeeping from Birchal to start off with, because we understand there might be a few questions about equity crowdfunding and how it all works from our end. So what I'll just do now is just share my screen with you all, and we'll just go through. Cool. So equity crowdfunding has been around in Australia since 2018 when the legislation changed to allow this form of fundraising. It's a new and growingly popular type of fundraising for early stage businesses. Essentially, the differences in the rules with equity crowdfunding is that early stage companies are able to raise funds from a large group of investors. There's no shareholder caps if you go through this type of crowdfunding. Or capital raising, I should say. So normally for a private company, 50 shareholders is the limit, which kind of limits them to raising money from high net worth individuals in large chunks. But with equity crowdfunding, going through a licensed platform like Birchal, those limits are no longer there, which means that companies can raise early stage funding from a large group of investors. So we've done more than 200 deals since we've launched in 2018. More than 200,000 people have participated on our platform. We've had some of the biggest campaigns on record so far. We've closed a $5 million campaign early in the year. And I guess the most important thing to point out amongst all this is that this is a really well-regulated industry that's governed by ASIC, who are the body that governs the stock exchange. And our role at Birchal is the gatekeeper role to make sure that we're putting offers live on the platform that are totally compliant with the rules and regulations set out by ASIC. Myself, I'm a campaign manager, so I work really closely with all the companies that come through on Birchal to put the investment offer live to our investor audience and to the general public. So we've been working with Crowdproperty now for 6 weeks, and we're really pleased to have them on the platform. Bit of a disclaimer from our end. So we're working with Crowdproperty on this investment opportunity. Birchal Financial Services is the licensed intermediary for this offer. So the information and discussion in this webinar is for informational purposes only and should not be considered advice or recommendation to invest. So we encourage you to do your own research and always consider the offer document and general crowdsource funding risk warning before investing, which is available on our website. And there'll be more details about the offer document when this investment offer goes live, which is going to be next week. It's the plan. And just in wrapping up from my end, there's a few frequently asked questions I just want to cover off for people that might be new to equity crowdfunding or new to Birchal. And then these are some common questions that we get from investors. And I'll just jump into them now so we can keep most of the questions and answers related to Crowdproperty later on in the evening. So you'll hear throughout your interactions with us talk of expression of interest campaigns and also the offer campaign. So at the moment for Crowdproperty, they're in their expression of interest campaign where they're building a list of people who are interested in investing. So they're not actually accepting investments at the moment. And when we talk about the offer campaign, that's when they are accepting investments. So from next week, like I mentioned, most people will have the opportunity to invest. And that's what we mean when we say investment offer. So investing through Birchal is a very simple process. If you're new to investing with us, the main things you'll have to have when you want to invest next week is a form of ID. So driver's license is usually the most straightforward form of ID, or if you're from overseas, a passport is also workable. And then just your payment details. So we can do bank transfers, direct debits, a whole range of options on the platform. And you also just want to keep in mind that you don't need to pay for your shares straight away. We have advanced payment terms for anyone who invests early and who's on the expression of interest list. So for those people, you don't have to pay until the end of the campaign, which is usually 2 weeks after they launch or when they hit their maximum target. So if you signed up early, that's a bit of an additional perk for you, just to keep that in mind. And for everyone else, it's 7-day payment terms. So when you submit your investment application on Birchal, 7 days later, we'll ask for payment. Now, in terms of actually getting your share certificate, so this is a process that Crowdproperty will go through after the offer closes. So our role at Birchal is we hold the money in trust until that happens. What we do then is we give a list of investors to Crowdproperty who have paid, and they can go ahead and release the share certificates. Usually that takes 2 weeks after the offer closes until the first batch of people receive their share certificates. And the share registry provider that Crowdproperty uses will be the one that issues you that share certificate. So just keep in mind, a couple of weeks after the campaign, you'll have your share certificate usually, as long as you've made payment effectively. Do get a question from time to time about cancelling investments. So there is, as part of the legislation, a 5-day cooling off period for anyone who makes an investment application through equity crowdfunding. So at any time within those 5 business days, if you want to cancel for whatever reason, you can just do that through the platform, and there'll be no need to sort of refund any money because no payment will have been made, and that's a very straightforward process. Next one is in terms of investing through a self-managed super fund or a company. So the answer for that is it's usually acceptable. It does depend on the rules set out in the trustee deed of the self-managed super fund. So there is some nuance there. I do have some resources I can send through if anyone's interested in investing through self-managed super fund, company, or even a trust. And finally, and importantly, for anyone who's interested in investing more than $10,000, you will need what's called the wholesale shareholder certificate. This is a certificate you can get from your accountant, which basically verifies you've got more than $250,000 a year in salary for the last 2 financial years, or more than $2.5 million, I should say, in assets under management. If you have either of those, you're able to get this wholesale shareholder certificate, which allows you to invest more than $10,000 through a crowdsourced funding round. If you can't get that certificate, then you're limited to $10,000 as a retail investor. So that's part of the rules. And that's every 12 months in terms of which company you invest in. So that's not across all campaigns, but per company. So that's it from me. I'll just stop sharing my screen now. And like I said, if there's any questions about this throughout the evening, please feel free to reach out. I've got some resources to send through. But what I'll do now is I'll stop sharing my screen and pass over to the Crowdproperty team so they can take us through their investor pitch deck.
Thanks, Martin. Actually, a lot of similar questions we get as a crowdfunding platform ourselves. So that's actually useful stuff. So just bear with me a second and I'll try and share our presentation. And also try and get you back so I can see.
You can see the presentation.
Yeah, there we go. Great. Sorry, challenges of technology. Thanks, Martin. So, yeah, very delighted to be here today. As I said, lots of synergies between what you guys do at Birchal and what we do at Crowdproperty, and one of which is what we're talking about tonight, which is launching our seed round, really to launch our retail fund, which is making these kind of investments available to everyone in a very similar style to Birchal, which you'll be familiar with. So tonight we're here to talk about a really unique opportunity to become a shareholder in what is going to become the leading specialist property marketplace lending platform here in Australia. So we can get into it. All right, so it's important to know, I think, that we've done this before. And that's not just myself as a founder. I've previously built marketplace businesses and exited them in the property finance space. But we're also following a successful business model here, which is proving to be rapidly becoming the specialist lender in this small niche space in the UK since launching back in 2014. They've gone on to fund over 1.25 billion in properties, which equates to over 3,000 homes built and funded in the UK. And proudly, they're able to claim no capital or interest losses to date, with over 17,000 investors on the platform and growing rapidly. And I'm pleased to say we're benefiting from that 9 years of expertise and IP, which has all been transferred. It's not just the technology which we're benefiting from here. And we're catching up fast. So in a very short space of time since launching here in May 21, we've already seen over 570 million in project loan applications, which is quite astonishing given our marketing spend to date. And it shows that there's a real need for what it is we're doing, and it's really keeping our borrower team busy. So these are the kind of things we're funding. So we fund and finance small-scale developments, helping property developers build more sorely needed homes. And I'm delighted to say that in the past, this has been the preserve of institutions and high net worth individuals with a lot of time on their hands. And what we're able to do through the platform, in a similar style to Birchal, is make this available to everyone. And this is part of the seed round, is to launch our retail fund. So some of the projects you see on the screen are just some examples of the projects we've already funded in Australia. Much like Birchal, you can come in, we make all this information available for you, so you can pick and choose the investments you want to come into. We make information available on the project, who the borrower is, what's their strategy. You can meet them through a webinar, similar to what we're doing at the moment. So we have a direct origination model, and that's important because these are projects which you probably won't see anywhere else. And we use that technology really for the efficiency to allow more people, the crowd, to come into more deals. But importantly, the business is kind of founded on that expertise. It's all about property people here, lending to property people. So why are we here? Well, every business should start with a pain. And the pain really here is that the banks are fundamentally failing small-scale property developers. The lack of trust is too far gone. And you can't miss a headline in the news at the moment about the housing shortfall here in Australia. We're just simply not building enough homes to keep up with demand. And for our borrowers, dealing with traditional lenders and even the non-bank lenders is a complex, slow, and expensive process. There's a lack of transparency, there are hidden fees and overheads all the way through. And quite importantly, there's lack of access to property experts. So you can't actually pick up the phone and talk to someone who understands your project. So for investors, property financing is a complex, slow and expensive process as well. And everyone wants to clip the ticket on the way through. So if you invest $1 today, by the time it actually gets through to the developer, it's quite rightly been through many profit pools, which diminishes that return on the investment on the way. So the solution is simple. And as I mentioned, it's about property finance by property people. It's about cutting out all those profit pools. We want to build a direct relationship with our developers, with our borrowers, and we want to build that direct relationship through the technology and the platform, which allows investors to come in and pick and choose on those projects, similar to, Martin, what you do on Birchal. So this efficiencies we provide our investors are also attractive to institutions too. So we have everyone ranging from retail investors through to institutions interested in accessing project loans via the platform.
So let's delve into that a little bit further. Practically, on one side of the platform, we have property developers. So once they've given us their information, they can get a response very quickly, and they get initial decisions generally within 72 hours. So that gives them certainty, that gives them speed, and that allows them to make decisions on things like land acquisitions, making offers on projects. Fees, there's no last minute changes, which are the crux of a lot of other lenders that are out there. And you can get to build your brand with thousands of investors. We get your name out there in front of your investors, and you can apply as easily as 5 minutes online, just on our website. On the other side of the platform, we've got investors. Now, remember, it's always a first registered mortgage on every single project, and that's there to ensure security for the project. The loans generally range from 6 to 18 months, and we can provide up to 8.5% target income returns. All of the projects are expertly due diligenced, and we make sure that we are crossing all of our T's and dotting all of our I's to make sure that that the projects are solid, to make sure that the team is solid, and that they can run the project from start to finish.
Yeah, so speaking of team, very proud to have pulled together a great team, really, who I guess share our passions here about building a simple, ethical and transparent investment platform. And that transparency is important, as I said, all the way through. So experienced Tony Zilli, who's my fellow director here. Tony's probably well known to a lot of you. He's been in the industry for a number of years now in financial services, and we were previously working on a managed investment scheme, which is lending money to small-scale property developers previously. Daniel, he needs no further introduction. But we have Alan Wang, who's been attracted to come and work with Daniel and our team here, for example, who's a qualified architect by background. He's been a development manager and is doing his own property developments on the side as well, as is Lisa, who heads up our operations. So you can see there's a common theme here. And we've also got some real expertise in the marketing side, which is going to help us as we grow our brand out. So the technology is fascinating. On one side, it provides more efficiencies for Daniel and the team for managing funding applications coming through for our internal operations teams. On the lender side, it manages our investors. And to give you an idea just how efficient that is, or a little bit of a window to our future, if you look at the team in the UK, they launch a project, or launch about between 3 and 6 projects a week at the moment in the UK, but each project brings in around 2,000 investors, and they are funded in under a minute on the platform. It's sort of 35 seconds, 50 seconds. So that's the technology piece which helps us really scale this and make this available to everyone. And as you'd expect, those investors have had their expectations set by internet banking. So it's not unusual, but in this industry, it is to be actually go in and be able to see your portfolio of investments on something akin to you'd expect from your internet banking.
And it's a data-informed process. So while the data is very important, we pride ourselves in getting to know the borrower better than anyone. So we understand their motivations on why they're wanting to do a project. Are they looking to hold on to the project and refinance out at the back end, or are they looking to sell the project? And we have a very due diligence process, 57 steps, which allow us to curate the best projects that are out there. And the statistics, while we've seen a lot less projects compared to the UK, I think the UK are up to, what are they up to now?
About 11 billion pounds,
billion.
I think, in project loan applications. Yeah,
we've seen a smaller amount than that. We're up to about 500 million Australian dollars worth of deals, but the statistics are actually very similar. We're funding about 4.5% of projects. But we get to know the developer. We are carefully doing the due diligence on projects to ensure that they, again, start and finish on time and on budget.
So yeah, we've got some great local traction already. Having been live, we've funded over 8 projects now. 2 of those have been refinanced on platform as well. These are just some of the images of projects funded to date, which Daniel and team know pretty much inside out. Plus, we've got many more in the pipeline coming soon. Pleased to say all our investors have been fully paid back in our initial loans here. And we've also got repeat business, which is core to this. So again, it's about that property people lending to property people. It's more than just the money here. It's about expertise, and that expertise adds value to people's projects. And we've seen 100% of our existing borrowers come back to our platform for their second raises, several of which we've already funded. Yeah, so we're continuing here to embed ourselves in the developers networks to grow the volume of project loan applications. And that's been part of our success so far in Australia, is that that's now about 570 million in project loan applications received. And when we look at how long it took the UK to get to a similar milestone, it took them twice as long. So yeah, pleased to say we're catching up fast. And another thing from a window to our future is really that opportunity. So this is I guess a low volume business, particularly compared to my previous business. You don't need to sell thousands of widgets in order to make a profitable business here. We know the business in the UK has built a great loan book from just 250 odd borrowers to date. And looking at our numbers here, you know, we need only around 100 customers to build a $500 million loan book. So it doesn't really take huge numbers to make this a very profitable business indeed. And that's shown out in our finances. We won't go into any detail here, but just to say, by the time we're doing a couple of project launches a month, we are breaking even. By the time we're doing a project a week, we're highly profitable. So move that forward when we're doing similar numbers to the UK of, you know, hopefully, 3 to 5 and more projects a week, it becomes a very profitable business. So what's the ask? Well, we're looking to raise $1.5 million through the platform, and our current valuation pre-money of 14.5 million. So really, this is the opportunity to come on board as an ordinary shareholder alongside the Australian founding team, the substantial investment which the Crowdproperty UK business has in our company here. They're very vested in our success, alongside a great network of existing seed investors who are already following their initial investments on into this round, which is very encouraging for any new investors coming in. So what are we going to do with that ask? Well, we really want to unlock that pipeline. We've got probably over 128 million, I think last time I looked, in our immediate pipeline, and we want to grow the borrower team to help unlock that. We want to grow our lender relationship managers so we can manage the investors coming on to fund that. And that's going to allow us to attract more deals. It's going to allow us to attract more diverse sources of capital, which is important to this model. So we want not just wholesale, which is what we have been, retail, but also institutional funds. And to do that, we'll need to secure a research rating. And that aim is really, as I was saying before, to get to that 1 to 2 projects a month in this coming year, followed by getting to that milestone of 1 project per week in 2025. And then we have the opportunity to launch this and repeat this into new markets as well. So while you're investing in Crowdproperty Australia here, you also have the opportunity to follow us as we go into new markets in New Zealand and Southeast Asia. So in short, we've got a proven business model. We've got expertise locally of scaling property and technology businesses. So we've de-risked it from that point of view with the team, the technology. We think there's good timing to be getting into the market now. We don't have a large loan back book, and we've been primed for any recovery going forward. There is a real opportunity to disrupt this market. The competition is fragmented. I think we could just disrupt this by being transparent and some of our values coming forward. And we're already demonstrating, as I said, we're 2 years ahead of what is a successful business model in the UK, with that opportunity to take all that expertise and IP, which has been transferred to our business. And we're in touch with the UK weekly, benefiting from that experience all the time, and to take that into to new markets, into New Zealand and Southeast Asia. So yeah, I will stop talking and open this up to any questions which people might have.
Yeah, thanks, David. Thanks, Daniel. We have a few questions coming through, and just wanted to highlight again to everyone that if you want to upvote a question, you just do that by hitting the little thumbs up icon next to it, and that's how we're going to prioritize the questions tonight. Also, just while the Crowdproperty team was presenting there, we had a question from Johan asking about any liquidity events on the crowdfunding raises through Birchal. I did pop a little article in there about an IPO of Biomi, which was an exit from our platform. Just a little bit more details on another platform, Equitize. You probably will be familiar with Car Next Door, which was bought out by Uber Carshare. And then stay tuned for a few more updates this year on exits. Obviously, we've been going since 2018, so reasonably short runway for exits. But yeah, those are a few examples there. So I'll just jump into the questions we have now, and thanks everyone for popping them in. So Ryan has asked a question here saying, what separates you from other companies offering this service in Australia, such as the likes of Balmain?
Yeah, no, great question. Thanks, Ryan. Look, this is an old industry, right? And you don't need a technology platform to do this. We funded a project actually here before we even had rolled out the platform. So there's plenty of people who've been doing this. Traditionally, as I said, this has been the preserve of kind of high net worths getting together, probably with a solicitor to write a first mortgage document. I guess what we bring is that technology platform. It's a bespoke loan management system, which has been developed over the last 9 years, which we're really benefiting from. And it's really that nexus between the technology plus with some real IP around that direct origination, which we're seeing in the numbers already. So I think it's just a unique proposition on a very niche market. We are only looking at the small scale residential property projects here. We're not building tower blocks. We're not building commercial buildings, which when they fall over, there's a challenge, right? We've got in-house expertise, which means if something happens to one of our projects, we can actually step in and work those projects out rather than resorting to the last resort, which is our first mortgage security.
Thanks for that, David. Just noticed we have a couple of participants with their hands raised. Just wanted to point out we can't do live questions tonight with how the Zoom format works. So if you have any questions, please pop them into the Q&A forum and we'll get to them as soon as we can. So next question in terms of upvotes here is from David asking, what are the returns in investing in Crowdproperty Australia? I'm not sure if that's a question about this investment offer or through the platform directly.
How about I answer both? So I'll start with the platform directly because that's a simple one. So that's on a project by project basis as a retail investor. And that's currently projects being advertised are targeting an 8.5% per annum income return. And now this is a debt product. You're actually investing in the loan. The loan has to get repaid. And for compliance reasons, we have to say a target income return. So 8.5% is probably what you'd be expecting as a retail investor on the platform. There can be some offers for wholesale investors as well, but yeah, happy to talk about those at another time. In terms of the company, that's always how long is a piece of string, because you're investing in something, you're coming on the journey with us. We can look at again experience of the UK business, which is when they went out for their last raise through a similar platform called Cedars in the UK. I think they were at least 5 times our share price here. So we'd like to get that, but there's no guarantees. It's investing in an early stage company, and you're really in it until there's an exit opportunity.
Yeah, that's right. And then, that's what we sort of see at Birchal as well. But like David's saying there, Crowdproperty in the UK has done equity crowdfunding through Cedars a few times now. And had some very successful campaigns there. Alistair here is asking, are the funds held in a trust? I'm imagining this is relating to the property investments. Can you elaborate on that in any detail, please?
Yes, so in terms of the property investments, we don't see those funds. They're actually held by an independent trustee and custodian who manage the funds. They're also the lender on record. Our role in that is the investment manager. So we're obviously originating the projects, doing the due diligence on the projects, but the actual funds we don't have control of. So that provides another layer of security, I guess, for you as an investor coming in. If something happens to this startup called Crowdproperty that you've never heard of, there is an independent trustee there who holds the first mortgage security and would ensure a workout or would ensure that loan gets repaid to our investors at the end of the day, with or without the investment manager being in place. Yeah.
Perfect. Thanks for clearing that up. Question here from Rowan. There's a few parts to it, asking, is there an upper limit to the loan amounts? And then also asking why only up to 8.5% in terms of returns. Despite the lack of trust towards banks, why would developers go to Crowdproperty over a bank? Is this because the interest rate is less? There's a few questions here. Last one is, what happens to the funds should the development go south, which I think you've answered already there, David. So yeah, a few parts to it: upper limits on loan amounts, why only 8.5%, and why would property developments choose you over a bank?
Yeah, I can probably talk to why people come to us as opposed to a bank. Very simply, and we did one of Australia's largest surveys for property developers. One of the key factors why projects don't get off the ground is because they can't secure debt financing. And the main reason is because banks simply don't understand. They're too slow, they're not transparent. We, as property people, this company was established in the UK by property developers to essentially fund other property developers or other colleagues in the group. And we essentially want to understand developers, and we want to understand the projects they're trying to get off the ground. Fundamentally, when you go to a bank, they're also financing things like plant equipment, businesses. Our niche is purely property development projects for property developers. And we understand these projects because we're doing them ourselves. And we really own this very niche part of the market. And the other thing I would say is being available to talk to developers, right? Being there to pick up the phone and call us to discuss projects over the phone, as opposed to being put through to a 1300 or 1800 number, being put on hold for a long time and not getting a call back. So we're responsive, we're transparent, and we want to help get projects off the ground, essentially. The second part of the question, just going back to...
yeah, it was around why 8.5% only, and is there any upper limit on the loan amount in terms of the size of a loan?
Okay, yes. So we lend, again, it's small scale development. So typically we're loaning up to about $5 million at this stage in time. Why only up to 8.5%? Well, that depends on the project. So it depends on the risk of that project status. That could potentially be higher as interest rates move north. We would foresee that going higher. I think it was around 7% when we started. I think it's important to stress that, for all the reasons Daniel just spoke about, we want to be the lender of first resort here. So what we do is we benchmark our rates against the other non-bank lenders in the market. And we then pass on the majority of that. We take a small net interest margin. It's usually between 100 and 200 basis points between what the borrower is paying and what the investors are receiving as a return. So as our rates go up to our borrowers, we pass those rates on to our investors. It's sort of that simple. Yeah, the reason why people don't want to work with the banks is not just they're slow, complex and expensive, because you could be sitting on a project for maybe 3 to 6 months waiting for a decision. So people come to us because they're looking for the speed, ease, certainty, transparency and that property expertise.
Yeah, I did see it might have been the UK business, but the slogan was property financed by property people. And I hope I haven't stolen that from the UK, but I think that sums up what you both are saying there. Got a question here from Aaron asking, what is your experience funding NDIS funded SDA building projects? Has this been a positive experience for you?
Yeah, that's very interesting. We're actually working and looking at a few projects.
Daniel, sorry, just to cut you off, maybe just for people who might not be aware of what that actually means in terms of the NDIS funded SDA building projects, you want to just give us a high level overview of that to start with?
Yeah, of course. So National Disability Insurance Scheme. So SDA is the property component of it. It's actually a relatively small component of the whole NDIS scheme. But what it does is it provides housing, much needed housing for people who need it. And the reason why they brought that on board is because the government realizes that it's that the current system is not working. We have people that are staying in hospitals when they can happily live independently in private housing. And so the scheme was brought online to allow developers, to incentivize developers to build housing to house people. So there's different categories of that. Currently, we're looking at a a whole bunch of projects that are across Australia that are either robust or high fiscal support, or one of the other categories as well. And we want to continue to fund this space because we see it as being not only niche, but also providing a good solution for people that are actually wanting the access to accommodation.
Great, thanks for the explanation there. A question here from Johan that I'll jump into because it's a Birchal question, saying that I recently tried registering on the platform and saw there was a requirement to be an Australian resident. I'm investing as an international investor, so should I assume there's legal/tax restrictions for doing this? I'll send you an article, Johan, and for anyone else who's interested in detail on this. So as an overseas investor, you just need to sign an extra declaration through the platform that verifies that you're able to make this investment based on your own country's laws. Obviously, with all the countries around the world, we can't go ahead and research all the laws specifically. So that's something for you to do yourself. And now the other thing just to consider is payments. There are some countries where it's hard to make payment from internationally. But if you speak to our support team, we can usually help you with all of those considerations. The main thing from our end is we cannot advertise these opportunities outside of Australia because they are governed by Australian laws. But if international residents are interested and hear about the opportunity to invest, there are definitely pathways to doing that. But I'll chuck in the answer there, the link to the help article, which goes into more detail. And for anyone else who's interested on the call, you can look at that. A question here from Marcelo asking about valuation. Now, I'm not sure where the valuation figure has come from here, if that's maybe come through some verbal conversations with the Crowdproperty team. But I will say that the evaluation will be available in the offer document, which is coming out on Tuesday. So I won't go into detail about that. But Marcelo is just asking about the process for how you came to this valuation. So if there's any sort of details that you can provide on, what your thinking was in terms of coming to the company valuation, it'd be great if we could hear a bit about that now.
Yeah, company valuations are always hard, as I think Marcelo is pointing out there. You've got to look at future cash flows, and that's very much what the valuation was based upon. We've got really clear signs, I guess, as we were probably showing in the presentation there, about our pipeline of future deals, and we modelled that out. We modelled that out using actual UK data on their journey, and we provided a discount cash flow analysis using a very healthy VC-like sort of 35% discount on all future cash flows predicted. So that's the basis of that valuation. And as Martin says, that'll be available in the offer document for you to review.
Yeah, that'll be out when the offer goes live next Tuesday with all the context we need. Obviously, there's a lot of moving parts there, so stay tuned for that. And everyone who's on the EOI list, you get access to that document early in the sense that this opportunity doesn't go live to the public until usually a few days later. So another reason to sign up for the expression of interest if you haven't done so already. Julia here is asking, do you prioritize funding particular types of developments or in any specific areas?
Yeah, so small scale residential developments. So what we don't do is we don't do 300 lot subdivisions. We don't do industrial. We don't do commercial. We do small scale residential developments, mostly Eastern Seaboard. We are looking at projects Adelaide. We're funding a project in Adelaide currently. We're looking at Tassie and we'll soon be out WA way as well. So small scale resi projects, and it's also worth noting from an investor perspective, all of the projects are investing in first mortgage loans. So what that means, it is the safest component of the capital stack, meaning that that you are last in with your funds and you're first out with your funds. And generally, the first mortgage does make up the largest part of a loan. So it is worth noting that.
Thanks for that, Daniel. Question here from Rowan, and sorry if I'm rushing through these quickly. We do have 13 open questions and we're trying to get through as many as we can tonight. So I appreciate the quick answers from the Crowdproperty team, and I hope it doesn't feel like we're going through this really quickly, but that's why we're here tonight. So we'll try and get through as many as possible. Rowan is asking, do you have an exit goal, i.e. stock market float or being bought out? As an investor in crowd property, what am I getting? Ongoing distributions of the profit, early access to deals. I mean, just from Birchal's perspective here, the exit path for most businesses is either a listing on the stock exchange or an acquisition. That's what most companies are sort of talking to. But as an ordinary shareholder, that does come with, ordinary shareholder rights. But anyway, I just want to throw it down to the crowd property team if there's anything more to add to that.
No, that's right. Thanks, Rowan. You're asking some good questions tonight. Exit goal. Look, I think there's a number of ways we could exit this business, and you've identified two of them. I don't have a crystal ball, but I do know we've had interest in Australia already from some of the larger, more well-known non-bank lenders who, surprisingly enough, don't have access to technology. They have already expressed interest in the company, and I know similar in the UK. So I don't have a crystal ball, but I would think it would be more likely be an industry exit than it would be a float on the stock exchange. Yeah.
Thanks for that, David. Thomas here is just more of a statement than a question, saying, as a property developer myself, I met with David and Daniel earlier and the way they deal with developers makes a difference. Time is money, I guess is what he's saying there. So I guess that's reinforcing our answers to a previous question about the expertise that this team has.
Yeah, I'll just add to that, and thanks, Thomas. It's a really good point. But speed, ease, certainty, transparency, I think will make all the difference. That's why they're leading in the UK. To give you an idea, Thomas probably spends about a third of his time looking for the next deal, and then about a third of his time actually trying to fund that deal, and then a third of the time actually doing the project. So if you can come to us, and we can maybe spend 10% of your time working on the finance. And making that a smooth process for you, that gives you more time to put back into your business, grow your own business. And that's really the people we want to be working with. We want to help them grow their businesses.
Yeah, great insight there. Thanks for that, Thomas. Johan here actually just clarifying a question he asked previously about the international investment. And apologies, I got this wrong. I was assuming that was from the Birchal perspective. Johan's actually asking from the crowd property perspective in terms of can people from overseas make investments through the platform? Can you just go into that in some detail? Thanks.
Yeah, okay. So that's actually prescribed by, I mentioned earlier in the call that we've got an independent trustee. Now they hold the license and we operate under their license. So they have rules around that. And currently the rules are we're able to accept investments from obviously Australia, but also Singapore, New Zealand. We might be adding that to UK and a few other places, but at the moment it's just Singapore, New Zealand and Australia.
Yeah, and that's very important from a legal and compliance perspective, of course, but there could be some updates in the future. Sally here has asked, what is the maximum LVR, which I think is loan value ratio?
Yeah, absolutely. Very good question. Look, it is project dependent, but generally, as a rule of thumb, we can say it's up to 70% LVR. And depending on the project, like I mentioned, so for example, land projects are lower LVRs in this current environment. It is worth noting, Sally, that we are getting independent third-party valuations on every single project that we're doing. So an independent third-party qualified valuer looks at the project and values the few valuations, the end sales values, the current values, and what it would cost to bring that up to the end built values as well. And a lot of our projects also have quantity surveying done as well. So we validate the builder's costs to make sure they're in line with industry standard, and we call them out if they're over or under pitching that build price as well. But not only that, we're also funding things like development exit and other products as well, which can be quite specialized. So again, we make sure we work with industry experts like valuers and quantity surveyors who understand those spaces as well.
Yeah, thanks for that, Daniel. And just another, just a note for everyone to upvote the questions that you want answered. We have 12 questions still open. I've got through 13 so far, but usually what happens with these webinars, we don't get to all of them in the end. So just another sort of nudge there. If you do see a question that you really want answered, please just give it a thumbs up so we can make sure we're prioritizing what everyone wants to hear about. Mark here is asking, how big do you aspire to get? guessing size of the business. Obviously, we don't have a crystal ball, but maybe you can talk about some sort of future growth plans.
Yeah, I'll keep eating. I think it's a very difficult question to answer. I generally think there's an opportunity to be, if you're familiar with the concept of being a category king or an industry leader here, right? There is a very fragmented marketplace for good reasons, lots of private lenders. So the opportunity to, grow to a $1 billion loan book is probably, very achievable, and if not doubling that. So by the time we get there, we'll be a supremely profitable business, and there's a whole world we haven't even talked about here, which is adjacencies to this business, right? So we're building a marketplace business. We're getting to see an awful lot of properties being developed. You could think of a number of ways which we could also monetize that database as well.
Yep. Yeah, absolutely. Alistair has asked, do you assume you are lending for the build only and the land has already been purchased?
We can have a look at both, but because we're sitting on first mortgage, we essentially need to finance out any other first mortgage hold. But yes, a lot of our products are dedicated towards that construction piece. But it's not the only thing we lend to. We also do renovations, we do modular, and we do things like NDIS co-living as well, as long as they're small scale and as long as they're residential. Yeah, good to know. And yeah, keep the questions coming, everyone. We've still got plenty of time to keep going. We can go a few minutes over, so we just want to make sure that if you do have a burning question, we can get to that. Carol here has asked, does 100% funded mean that you have funded all of the acquisition and development, or 100% of the ask from developers, say if they ask for 80% LVR? I think she might be referring to when it says 100% funded on our website. That means 100% of the loan is funded. Remember, first mortgage not exceeding 70% LVR. So we're not funding 100% of all of the costs. We don't do that. We're up to 70% and we always ensure that there's a degree of safety there to make sure it fits within our credit policy.
Yeah, it'd be very generous of you if you did the 100%. Thanks for clarifying that. OJ, or I hope I'm pronouncing that correctly, apologies if I didn't, is asking, is there a huge difference between the UK market and Australia? And how do you plan on mitigating the risk based on the difference, if there are any significant ones?
That's a good question, OJ. I'd say there's more similarities than differences. If anything, I'd say there's more of an opportunity in Australia, right? We've got a growing population here. We're in the midst of this housing crisis. You talk about New South Wales, where we are. The Premier is talking about this missing middle, the fact that we need to build more infill housing. And that's what we do, right? We originate those small scale developments where people actually want to work and live. We're not, there is plenty of open space in Australia where we've traditionally gone, well, we need more housing, we'll go further and further away from where people actually want to work and live in their community. But I think the time is changing. The political mandate here is changing at the moment. We've gone away from worrying about affordable housing and tinkering with demand side with, first home investor grants, for example, which what do? They jack up the prices. I think there's a real recognition from industry and government now that we need to be, and that's kind of where we come in. We can originate those projects, but then we can also allow investors to come in at scale who are interested. So I think super funds, for example, you might be looking to deploy funds into this space. So I think there's a great opportunity in Australia, and we all love property. I mean, browsing realestate.com.au is like a national pastime here. People seem to do it before they open the papers in the morning. So,
Yeah, going to a new town and checking out the windows of the real estate agent.
Yeah.
Pastime too. But I think what you're saying there, David, it's all coming back to supply, and that's definitely something that jumped out to us at Birchal in terms of the good work you're doing at Crowdproperty. So yeah, keep that up for sure. David here is asking, is this a convertible note? From Birchal's perspective, this investment opportunity is not a convertible note. You're getting ordinary shares. So it's a very sort of straightforward investment proposition. And like I said, the full details of the opportunity will be available on Tuesday. Offer document will have valuation, share price, all that sort of stuff. So stay tuned for that. Now, Alistair's asked here, hybrid bank stocks currently provide returns of over 9%, some pretty juicy returns. Trying to understand if an investor would also see benefit from equity beyond the 8.5% per annum return. So I haven't seen 9% bank returns, but yeah, you did mention hybrid bank stocks there. So I guess the question sort of relates to any additional returns beyond that 8.5% per annum.
Yeah, I think we're confusing a couple of things here. First, I'm not going to go into financial advice. It's very much about we want to provide, I guess, low risk investment opportunities. It's why we only play in the first mortgage space. It's why we do an extensive amount of due diligence. You know, as Daniel was saying before, we actually exclude about 96% of project loan applications which come through. So we're really only putting the best project loan opportunities up onto the platform. So yeah, it's about risk return. In terms of that 8.5%, as I said, that's just where loans are sitting at the moment. As we're seeing interest rates rise, you could well see those rates go up as well. We simply pass those on. It's a very, very open, transparent model in that respect. In terms of confusing that, I think possibly with your investment in the company. And so the nice thing about if you're taking an investment in Crowdproperty itself, you're getting shares, as the previous question was about, as you become an ordinary shareholder alongside us as founders. And we're in this for a lot more than an 8.5% return. So you are investing in a fintech. There's a technology platform which sits on this. We all know that fintechs and proptechs command much higher multiples. Nothing's guaranteed, but you know, as I said already, the experience in the UK is they're over 5 times the value of the Australian business, quite rightly. But we're on a fast path to try and catch them up.
Yeah, thanks for clarifying. I think that tonight we're trying to tread the path between a few different investment opportunities here with Birchal, Crowdproperty, and what's going on. So I think we're doing our best with that. But apologies to anyone if we've sort of got our wires crossed there. But I think David untangled us for sure. So Gino here is asking, who are the top 5 competitors of this model at the moment in Australia? And do you have any information on their estimated market share? You might not.
We do go into that a little bit more in the offer document. There, as I said, really in the small scale space, this is a very fragmented market. So there is no clear market leader. I mean, who we'd see in our term sheets, typically I'd say La Trobe's probably the biggest one, but even then they've stepped away from the small scale. They're sort of moving generally into more bigger loans, but they will do some small loans. We've seen recently the big banks who you might expect to be the dominant guys here move away from that. So recent example was somebody went to CBA, for example. I think they were looking for a 3 million or 4 million lend, and basically we're told that the bank doesn't do construction finance unless you want to borrow more than $5 million. So they were sent to the small business team, and the small business team said, yeah, we can lend you $3 million, but we don't do construction finance. So the big players who you might expect to be in this market really are not there anymore, which is really the reason why a lot of non-bank lenders have been growing rapidly over the last couple of years.
Yeah, thanks for that. And follow-on question here about competitors. You've sort of answered it already, but in terms of distinguishing yourself from, you know, funding.com or La Trobe Financials, is there anything more you'd like to add to that?
Yeah, I think I touched upon it before. Specialism, and funding.com do a great job of first mortgage loans, but they are, I think, typically looking at other purposes. So I'll look at bridging finance, for example. We are very specialist into just doing, you know, focused around renovation, construction, value-adding projects. So you're investing in a loan in a project which is adding value to that property. And so I think that would be our real, I guess, difference from those competitors named there.
Yeah, thanks for that. Marcelo here is asking, okay, so if I get this right, this 8.5 investor return rate is the same as your lend rate. If this is correct, then your income is 100% derived from your fees. If correct, then what are your usual fees? Hope that makes sense and I've read that correctly. David, you across that?
Yeah, thanks, Marcelo. You're nearly there. You're nearly there. So we basically, there's 2 ways we derive income. One is from our borrower. We raise funds for them on the platform. We charge them a success fee once they're raised. A bit similar to Birchal, so we only charge about 2 to 3% on a successful raise. And then we have a small margin between what you're talking about there, which is the investor return, and what the borrower is actually paying. So we typically take between 100 and 200 basis points there as well. So that's really, if our success fee, I would describe as our cash flow. I'd describe the net interest margin as our profit.
Perfect. Thanks for clarifying that. Eric here has asked, and thanks everyone for your questions. We actually are tracking pretty well for time, so please get them in if you have any more burning ones, but we've still got 5 minutes to go, so this is all good. Three more questions to get through. Eric has asked, what is the process if I need to exit and sell my shares? Similar question for Marcelo here as well. I'll just give a bit of a background from Birchal side of things as well. So obviously you're investing in an early stage of a private company, so there's no open market for selling shares like the ASX. Now for companies, there is the ability for individuals to form one-to-one relationships if you want to sell shares, but that does have to be approved in the company constitution. So there is a bit of nuance to that. But usually what you're doing here is you're in it for the long haul, and the exit path that we described before, acquisition sounds like the one that Crowdproperty are leaning most heavily towards, or listing on a stock exchange is what most investors are hanging out for. But yeah, Crowdproperty team, do you want to add anything more to that?
No, I think you've described it very well there. Some of our existing investors see the UK business as painting a pretty good target on their back already for acquisition. I always like to say there's no such thing as an overnight success. They're usually about 5 years in the making. So you have to go into, I've invested in other startups as well. I've founded and exited some, and yeah, it's usually the long term which you're in for generally.
Yeah, that's it. That's the great innovation of equity crowdfunding is you can actually get in at this early stage. Like I said before, usually it was limited to 50 shareholders. So this is a new market, but yeah, keep in mind you're not buying shares in Telstra. You can't sell them or buy them that easily. So yeah, long-term time horizons is what we're usually looking at here. Final question that we have open here before we sort of start to wrap up. It might actually be very similar to the ones we just answered. So Mark's asked, if you were to list or trade exit, could you provide investors now with some form of an incentive on the right? So again, we can't really do any sort of like special deals in terms of how this investment opportunity works. The deals will be very clearly outlined in the offer document in terms of the price per share, what you're getting. And again, that's just a proposition that you have to kind of form in your own mind in terms of, is this a good long-term investment? So we can't do any sort of special warrants and things like that for people who are getting in this round. But yeah, thanks for that question. It does come up a few times before, but yeah, no special deals is probably the summary there. All right, just in wrapping up, and thanks everyone for sticking around. Obviously this webinar is being recorded, so we'll send a copy around after. I really appreciate everyone giving us part of their evening and being here tonight. What I'll just do in closing, I'll just throw the Crowdproperty team for one last pitch to investors. Your offer's opening Tuesday next week is the plan. Why should investors get involved in this opportunity? Maybe just a quick 30-second summary from both of you.
I'm super excited, right, to be able to share this kind of opportunity through Birchal, get the opportunity to get involved at this early stage of a business, which is actually following a proven business model. This is not like previous startups which I run, which you're burning a lot of money on building the tech platform, hoping that this is going to achieve. We know this has been successful overseas, and we know we're even more passionate about property in Australia, and we know there's never been a bigger need to build more homes, which is exactly what we're setting out to do. So yeah, love you to get involved, not only as a shareholder, but then to come on the platform, invest in those project loans as well. So that's only going to help us grow the business, help us do more deals, help us ultimately build more much needed homes.
Being a property developer myself, I've seen the pains of getting finance. So it's a privilege to be able to sit on the other side and help get projects off the ground. And I see that, and it really drives me to be able to help developers do that. And there's a real opportunity here to be amongst it, to be to help solve some of the supply issues that we have in this country, to get projects off the ground, not just huge buildings or massive land subdivisions, but really small infill houses or townhouses that people actually want to live, and it's really passionate. I'm really passionate about it. I feel really strongly about this, and I hope you guys can come along this journey as well.
Awesome. Thanks both. Yeah, and well done again on your work so far. We're really proud at Birchal to be hosting this opportunity. And also for the Q&A tonight, very good, succinct answers. We got through all the questions, 27 questions. I really appreciate everyone who stuck around and gave us part of your evening. Just from our end, a bit more housekeeping. Next Tuesday is when the opportunity will go live. Everyone on the EOI list, if you haven't signed up already, please do so. You have early access to this opportunity before it goes live to the public. We regularly see offers sell out before they go live to the public. So it is your privilege as part of that list to get in early and to have first access. So please just mark in your diaries next Tuesday, 12 p.m. is when this offer is planned to go live. Thanks everyone for giving us part of your evening to be here. The recording will be available tomorrow. And finally, thanks David and Daniel for your time and for working with Birchal. Been a pleasure.
Thanks, Martin. We've really enjoyed it.
Thank you, Martin. Thanks, everyone.
Thanks, everyone.
See ya. Bye-bye.